Okay, hello everyone. This is Zach here from Sifu. So together with Mr. JK Kang today, okay, co-creator of XChart, today we're going to share with you, okay, technical divergence analysis. Now, before we start our section here today, so I would like to do a quick check. Is my sound and screen coming okay? If yes, type a A for me, right? If my sound and screen is okay, type a A for me. Do remember to help me to click the like buttons for me. Help me to share this out. If you feel that our so called this bi-weekly live Facebook section is helpful for you, appreciate for you. Can you just help me to share this out, please? Okay. So I have some stock review for we saying. Don't worry, we saying later on towards the end of the sections, I believe Mr. JK will definitely answer some question you have. Okay, but before that, okay, I will pass to Mr. JK to start our section. So JK, I will pass the floor to you first.
Thank you very much, Jack. Hi, good morning, good evenings, ladies and gentlemen, those who are ever online. Great to meet everybody's again. Okay. Yeah. Today's we're going to talk about the technical divergence analysis. So this is more towards the whether we are able to meet up with a bull turning point or a bear ending point. So whether they are along the way or midway through along the markup phase, or we are probably ending toward the ending phase of the markup there, we will take a look. So perhaps we could be able to come down to some stocks that we can be able to see whether current team do we met up with any of these bull bear divergence or not, or are they probably at the midway through to have be able to carry on the bullish trend or not. Okay, we'll take a look. Okay, so before I proceed, probably I just want to make a quick disclaimer over here. This is just purely information sharing purpose only. We do not make any buy call or sell calls pertaining to these sessions over here. Okay, please consult your advisor or your financial advisor before making any investment decision. Okay, okay. Without any delay, let's proceed. These are the contents that we have gone through over the last few sessions. Particularly, the first one will be the price movement cycle. We are talking, we actually talk about how do we identify the bullish up or the bearish coming down, or even the cross sections over from the accumulation phase into the bullish cycles. Okay, so this is what we are interested at. It is our entry point, and toward the end of this markup phase and into the distribution. Particularly today, where we will talk about the divergence. So it's whether the bullish divergence over here or a potential bearish divergence around here. Okay, this is what we are going to analyze for today. Ever since that we have started off with the markup phase, so now we want to identify how do we be able, beside looking at the moving average, how do we actually tackling the price movement behavior by itself to see whether they are at a bullish juncture to cross up, or near to the distribution here, the bearish cycle to come down. Okay, or are they actually along the way, midway through along this uptrend, whether we have been midway through to before we actually reaching to the peaks area. We'll go through it later on. Okay, uh, on the second part of it, we also have gone through what would be the actually MACD, moving average convergent divergent, the MACD, which is really composed by the two EMA lines by computations of the differences. Then the sigma is taken the EMA over the MACDs over here, and the histograms and the oscillation by itself. Because we needed to have this MACD and this moving average for us to be able to analyze the divergence later on. Okay, of course, during the last session, we also talked about the DMI. How do we identify the good golden junctures, the positive up and the negative down, with the ADX come in between to kick off the true growth cycles. Okay, we'll take a look also all in combinations. Beside that, there's another RSI we have been looking into, the crossover at the 50 junctures. The crossing out will be the entry good point, and the the exiting point is when you come down below the 50. This is what we have gone through over the last couple of sessions. Okay, so today we'll look into this so-called the divergent analysis along the trend. When I say along the trend, they could be a bullish on the up, okay, or hidden that we could be able to see along, identify along the way, or probably we are at the end of the bearish divergence cycle there, or we are actually at the hidden bearish midway through of the diving. Okay, we'll go through. So regular bullish divergence actually happened and found along and toward the end of the downtrend. It means that along the bearish declining coming down toward the bottom, we normally identify as the downtrend valley. Likelihood all this bullish divergent area could be happening. Particularly, this one would be in the accumulation phase for us to identify it during the price movement cycle. Over the regular bearish divergence, okay, this is usually found along and toward the end of the uptrend. So whether do we have able to see some of those so-called the data cycle or any power utilities, those stock that actually reaching up to the uptrend, is it toward the end already or not? Okay, we will come into those couple of stocks as our example later on. Okay, or actually some of the stock was actually hidden bullish divergence. They mean they could be along the midway through. Hidden bullish divergence usually found in the uptrend market cycle. Okay, it's normally happen after the bear divergence that the price form a higher low, and the uptrend may continue in subsequence. So hidden is actually trying to spell out some that you saw a bear divergence, but finally there was a higher low perform over there that will be able to kick off with the continuation of the uptrend. It continues along the way. So all these hidden bullish divergence, it is along the way on the uptrend, but it is just a short pause in between a so-called a pullback, but it was identified as a significant pullback during that. That's how we identify as a hidden bullish divergence. So honestly speaking, there are a lot of stocks actually happening of this juncture at the moment. Okay, so if it's those that already came down along the way, so they could be a hidden bearish divergence. That means they were found in the downtrend. Okay, it happened during the downtrend, but it normally happen after the bull divergence and the price failed to break up. This is a keyword. Failed to break up the previous high, the shock of the previous peak. So it formed a lower high. Here actually formed a higher low. So that's opposite. So downtrend continue. I mean, it's going to actually a short rebound during the downtrend and it's proceeding to the declining phase. This is how it happens along this. Of course, all these are by texture, by text only. I would like to actually share with everybody over here how we do actually look at it in the pictorial formations. Okay, key important things that we are analyzing the price versus the MACD indicators over here. So for a typical bullish regular formations, okay, you will be able to see the price is getting lower and lower. That's why you call it a lower low. Okay, in conjuncture or in verticals correspond to the MACD over there. With the lower low over the price, but MACD form a higher low. This is called identified as a bullish divergence. Bear this in mind. In opposite, if it's a simple regular bear divergence, that means you could probably would see a higher high. That means we are actually moving up the trend with you into the market phase. Higher high, higher low, higher high, higher low, higher high, higher low, until such a stand that you will find a higher high, but with the lower high with the MACD indications over there. So this is the juncture where we identify it is started to have the bear divergence. Okay, this is a bear divergence. It is happening. So during this bear divergence, if it's actually higher high with the lower high, so you see that the price actually pulling back with the MACD coming lower. So if you put these nations of the analysis over here, come back to this nature. lower high, if it's formed, oh, sorry, a higher low was formed during that pullback. That pullback will have a significant lower low. Higher low combined with the lower low. So this will actually helping us to identify, hey, the trend probably will be able to come back. It is a higher low, even though there was a lower low. If everybody one over here could have recalled formerly during when we study about MACD, the pullback of the MACD normally will come near to the zero level. If you recall, I actually stressed very strong about this point over here. The pullback of the MACD come near to the very zero there, which is forming a lower low, whereby the price did not get to the lower low, but instead it is forming a higher low. So that will be the next opportunity for us to make a new entry point. Okay, so this will be the scenario many of us could have been actually encountering at this juncture, this point. But rarely we will be able to see any of these so-called a hidden bear at the moment, because most of our stock, if they say you talk about the property lah, you talk about construction lah, even you talk about the data analysis or data center analysis, AI, those things, right? Those particular stock related ones are still on the uptrend, but actually had they hit up to the highest most or not? Like this case, while they pull back, could they form this nature? This is where we are at this point in time. Okay, this is where we will be in at this juncture in time. So I will have actually an alternative presentations of this so-called the price versus the MACD over here now. You can take a look. With the higher high corresponding coming down, you see a lower high over the MACD, the secondary side. So that will actually a regular bear. So when the pullback will have a form a higher low, which is actually a hidden bull in conjunction with the MACD become a lower low. This is how the scenario of the MACD pull back near to the zero area or slightly below zero area and rebound during this price comeback. So the bearish divergence coupling with the hidden bull will have the continuation of the price. The trend may continue. Of course, our observation of this type of the formations here will be together with our markup phase. Okay, markup phase with all the moving average still getting higher high along the phase, the markup phase, higher high. The short term, mid term, long term are still rising along the way, matching up with the price would actually come back for some of the EMA 3, 30, 50, or even 80, then will be have a rebound in subsequent. So that's how we actually wanted to look into most of the stocks that currently happen to be around this juncture over here. Unfortunately, we would not be able to see many of the stock in this cycle at the moment. Okay, but analysis will be a lower low over the price versus a higher low. Okay, we probably will have to recap some of the stock, how they kick off from this point into the new uptrend phase from the accumulation into the markup there. So that will be the juncture we'll be looking into that instead of seeing some of this hidden bear that juncture case study. So today I'm not able to show you off with any live presentation on the hidden bear at this point, unless I will recap with some of those formerly it was actually during the downtrend into accumulation and kick off into the markup. We'll take a look some of them also as a case study. Okay. Okay. Let's proceed on to take a look of our FPMKLCI first. Okay. So where were we currently? How we actually take a look with our so-called the FPMKLCI 70 small cap and the mid cap positions. How do we actually being at this juncture? Although I actually have snapshot some of this live chart over here. Okay, I will show this few example with our case study of this bull bear divergent analysis. Of course, if it's there, I will combine with the the markup phase and the MACD's analysis from the earlier stage that we have gone through. Okay, let's take a look. The first one will be the FPM KLCI. Okay, so you can see from I actually portray into two charts over here. The left chart here I put it as a daily. Okay, the right chart here I put it as a 30-minute. I just wanted to illustrate the divergent approach. Okay, so let's take a look of this daily over here. You can actually see that there were a few of these lower low happening. Okay, right, this is the lower low of the former KLCI versus the MACD, which is higher low. So during when you met up from here to here, lower low over the so-called the index, higher low over the MACD. With this scenario, it is actually portraying a what? Lower low, higher low. Lower low, higher low. So the bull divergence started to kick off. So rebound actually effectively take place. Am I right? You see that? This example versus this example. But this rebound is significantly taken place. Met up with the declining MACD. So it is not in our markup phase yet. It is so-called within our accumulation phase. And happened that during then there was a lower high. Even though this one probably will close as the about double top versus this lower high. Okay, this is so-called in our so-called divergence. We have a couple of cases in by priority class 1, class 2, class 3. Happened that this is one of the class 2. A lower high met up with a double top. So it spelled that this is not higher high. That means I can't be able to penetrate too further. With this combined in analysis, this is on the downtrend. So if you look at the bear chart itself, the lower high versus this double top, or minor higher high, it is still suppressing the price to come down, such that to the extent that another form of lower. See that? It is minor lower low or even with a double bottom. Met up with the same scenario. At the same time, it was actually the MACD was on the higher low. Okay, so this is another bull rebound. Rebound, I quoted as a rebound. I don't call it as the uptrend. It's a rebound only because we were suppressed by the 200 line in our market cycles analysis until such a extent that it already stay up there and forming a new higher low. A new higher low into the higher low. So bull divergent, and bull convergent. Oh, sorry, this one actually versus this. It is a bull divergent as well. And until this particular stage here, this is higher low versus this higher low. So after this stage here, a higher low. After this stage here, the higher low, with this higher low, it become a convergence that it started to push up the new trend, which is actually the cycle was truthfully spelled that way. So you see, overall, from this lower low over the FD versus the higher low on the MACD is telling me that only until this particular stage onward, it become a healthily that's a convergence started to take place. This is how we do the convergent and divergent analysis with the index and the MACD. Okay, so how about at this point in time? After this one, all these are getting higher. So it is staying in the convergence. You see that? It is staying in the convergence stage. And even with this one, it is still a higher high. Huh? So those higher high versus our KLCI higher high. So we are healthily on the right track to be there. Okay. Okay. We are still on the higher high, higher high, higher high. And toward the higher high there, the conversion, along the way, you will meet up with some of the higher low versus the lower low. So this is what? This is truthfully a hidden bull. You see that? A higher low versus the lower low. So it still may be able to carry on. Of course, it was along the way, as I said, there was a pullback. So during these pullback consolidations, so whether we have actually thoroughly gone through this consolidation or not, we are yet to monitor through. To be exact, what we wanted to see as a final, we wanted to see that the KLCI should be able to stay beyond 1633. Then it'll be healthier. Just like formally during this stage here, around here, formally around here. So are we at this juncture to see through these schemes along? Similarly, okay. So in conclusions, what I'm trying to say over here, after this blue divergent conversion and is riding on it, we have not thoroughly met up with any bear divergent yet, not yet. And concurrently, you see this 200 line already on the markup phase. All the EMA is on the rushing up. So they are still on the positive directions. Our only potential so-called negative impact to observe subsequently is if there is a next round of this KLCI were to come down and the confirmation has to be much lower than this 1526, much lower, or even the initial one will be much lower than this one is 1580 below, which is lower than this. So by then, if it's getting lower than this 1580, you probably will anticipate that this MACD could have sink down below zero already. So that is not what we want. It's just like a formally when we studying the MACD, but we don't want to see our MACD stay below the zero level. This is not, this is negative side of it. We don't want. Of course, this is 30 minute, a short cycle, then it rebound. This is the rebound area. Okay. So in conclusion, KLCI it is still there to support on the rise. Okay, everything is still on the higher low. All this hidden bull is still supporting the trends to be intact. Higher bull, it is still there. Okay, these are the things that we have studied the phases. We have studied the MACD, DMI, RSI. Now we come to this divergent analysis. Put all these things together. So is all this sounds to you it is on the right track to go or not? Apparently, it is now. It is still on the track on the go. Okay, until as I said, the next when it started to stop below, I mean it fell below 1580, then it started to spell the first initial negative impact. Okay, of course, our face will tell me that all these short terms even moving average it started to have a much significant pullback. Of course, the worst will be when even the midterm of this EMA, the purple, blue, brown color of it started to have pulling down. That will be a substantial pullback effect already. Of course, that is not what we wanted to see in subsequence. Okay. So KLCI so far, yes, is still getting ready on the rebound to go up. How about next? FBM mid 70. Mid 70 is those with it among the 100, it is out of the 30. So with this scenario, you see, we made up with the first bear. Am I right? the first bear divergence. After the bear divergence, it is a higher low. So once there's a pullback rebound, right? With the confirmations of this so-called the hidden bull supported, everything of this is still riding above the zero level. So the trend continue. It is healthily now. You can see that the mid 70 is getting beyond 18,2500. Okay, it is above already this part already. So what we wanted to monitor in subsequent is it able to sustain or not, stay above until this guy will be able to get higher high or not. Okay, but when we make analysis decision, right, once this is rebound, it form a significant hidden bull divergence. So we should continue from there on. That's how we make the judgment with the divergence helps. Okay, so how about the FBM small cap? Similarly, there was a bear divergence. Oh, sorry. Wait, let me pull back to the daily. A bear divergence coupling with the, met up with the hidden bull in subsequent. That's why just now during the divergence, I keep saying that we are at a lot of stage of the hidden bull because the key index was already supporting us in that manner, right? So the hidden bull divergence. The scenario of this so-called the hidden bull divergence is at the initial risk in the sense that if this bull divergence and this divergence does not get much higher, it is not higher than that. You see that? If upon this it cannot got beyond this so-called almost 20,000 level, right? Then this start to have the lower low. So it will portray to the new scenario of this lower low versus the next lower low. So lower low after this hidden bull, right? It might not be able to carry out the good scenario. So worst scenario, if they say the small cap would have actually crashed down below this scenario, okay, if it's coming down like this, so do you see that there's actually head and shoulders formation? So the critical point now is everybody will have to observe for a small cap here. Try not to see that it will drop below this uptrend line. If it started to have initial drop below, right, the ultimate formations will be when it drop below this one will be the curly part. So this will be the initial part of the so-called the head and shoulders over the bear divergence scenario. Okay, if this happen, right, this line, if this line happen, then it will not be good for all the small caps already. The first lower low, otherwise you see all these are higher low. So we do not want to see this line to come, no? Okay, if it happen to happen, right, everybody better be careful about your small caps components. Okay, so that will be much risky when it drop below this level. Okay, but if it's actually coming down and later on it rebound from there, then no problem. So the new higher low on the way to form, if it's having a good scenario of the overall market, then we will see this uptrend to go, the rebound. As long as it managed to go beyond about 20,000. Okay, so that's for the small cap and FBM mid cap. So FBM mid cap and small cap actually looks resemble. So also cautious about the potential of the coming down. This is the cautious part. Okay, but if the significant rebound happen to be like this, then no problem. If it started to rebound like this, then it's okay. uh, Same thing for both small cap and the mid cap. Okay, if it happen to be like this, it is okay. The cautious is it should not be dropping below some 23,000 for all these small cap and mid cap. Okay, so we have seen through the our current indices position. Let's come to take a look at the case studies on the stocks environment. So I will just quickly run through some of the uh, stock with the illustration of the divergent case studies. Okay, the Pekat SGB, Ceiling, YGL. Then we'll take a look also the SKP resources, DSS and LNP. Okay, so let me turn on to the live components over here. So the first one we wanted to see will be Pekat. So Pekat, you see on the left side here, there is a higher high and double top today. So when they had higher high, it met up with the potential lower high. Correspondingly, you can see over the 30-minute cycle here, it started to have portray a potential lower low. So these are the scenario that is started to have a bottoming at the topping area. Okay, so they are started to have some toppings environments over the Pekat. Gotta be careful. Uh, no doubt it is on the higher high along this way up but it met up with this pair divergence. But that is not the end of it, no? Please, I don't say this is the end of the cycle. I just trying to portray that it is coming to potential a pause area. Look at it. Look at this Pekat. From this accumulation into the markup phase, you look at all the EMA. Always bear that in mind. The moving average is overriding majority of the indicators. Okay, so most of the moving average is still shooting rise, no pullback at all. So they are still pretty strong, to be honest. So with this higher low, higher low, higher low versus the current position of the lower low, what does it trying to tell us? Higher low versus the lower low. Higher low versus the lower low. Higher low versus the lower low. So it is a hidden blue scenario at the moment. So they are still in the hidden blue scenario environment. Okay. For this so-called the Pekat. So how about the next one? SCG. So SGG during this instance here, so it started to have a higher high, right? You see the hairline, this hairline here. During this short-term environment, within about 1 to 2 weeks over here, it's actually a bear divergence. That's why there's a significant pullback during that. So this is a short to mid-term analysis. A bear divergence happened to take place over there, and it is a lower low. So that bear divergence tell me that this is almost at the peak area. There's a reason why there's a very negative pullback candles happen during that instance. This is pretty sharp on the pullback. Okay, but that pullback doesn't mean it is end of it. Again, you look at the moving average, all these are still very strong. They have not been able to, we have not been able to see all these so-called the short-term EMA is on the pulling back yet. They are not. Okay, unless you see probably within this short term here, all these prices started to drop below, even probably below the 85 cents already. That would be started to spell the significant negative already. Okay, a significant negative over this pullback if it started to happen. today was pretty negative, no? So could this actually happening or not in subsequent? You got to be careful. Huh? Okay, but in short term here, it was already portrayed. Okay, even with this one, even with this so-called the price happened over here, it's a higher high one, but that wasn't higher high. It is a lower high. So that is also portraying a new pullback divergence, a bear divergence is started to take place. Okay, so the worst case of this so-called bear divergence will have been able to support it somewhere around about 84 cents around. It should not drop below this level. Okay, so that is for the SCG ceiling. Ceiling, you see this around here. I just wanted to point out a couple of how do we identify the bear divergence scenario. So when they met up with this so-called shorter terms analysis, right? This bear divergence is started to have actually the pullback already. Okay, but happen is still on the higher low. So the rebound is taking place, but all this rebound is not getting higher than the former one. So the significant bear divergence is still have a significant high pullback. Okay, so it is still on the significant pullback divergence happening around here. Oh, so that's on the ceiling. So if whoever having shorter term or mid long terms from the former or below 20 cents here, right, could have position you're profiting in these short terms. Okay. Another one is YGL. Okay, see YGL lately there was a new short higher high. It was actually within the shorter terms of the 30 minutes there, a higher low versus the lower low. That's the reason why that pullback divergence is taking place. This is a bear divergence signal. So if you're able to come down to 30 minutes, you can see a very clear scenario is happening. Once this pullback upon this crosses down, right? So whichever started to have got below 26 cents of the YGL, it started to pull back already. So once this pullback is happening, right? But it doesn't mean that it's totally killed off. This hidden bull is still supporting it. So when the pullback is taking place, what would we have to do? Normally, so this is actually the hidden bull. So why we wanted to learn all these bear divergence in hidden bull? So that you know that if you happen to able to capturing the getting prepared that knowing this price is going to pull down and you know that this is where it should not drop below. It should not come below 205. Okay, so that is the lowest zone. Once because it dropped below 205, it will start to portray a lower low. If it's lower low, that is not what we want to see. Lower than 205, it become a lower low. So all these lower low is portraying lower low and lower low. That means it's trying to lead all the way down. So we do not want it to be. So if you are still keen on this YGL, after you probably could have get off after this pullback one, this is where you will be preparing somewhere near to this 205 or perhaps to this 215 area if we manage to come because it is pulling back near to the 200 within the 30 minute. This is norm. Okay, a pullback effect is norm. So if you look at the daily part itself, the moving average it is so still so strong on the up push. It is not even near to the middle band yet. Okay, this is the middle band. The middle band is over here, which is somewhere around SMA 20. This is almost equivalent to it. So pulling back near to the 200 lines within the 30 minute, it is still somewhere near the supportive area, which is our worst supportive is 205 for this particular case. Okay, so let's take a look one more. SKP resources. You see, SKP, it have gone up to so much of the higher high until today it started to break new high. But during this instant of higher high, you look at the scenario here, is actually a lower high over here. Okay, so bear divergence is pulling this back. With this met up with the hidden bull, that hidden bull was actually supported by this lower low on the MACD. So the rebound is significantly taking place. Okay, so remember I mentioned that I wanted to share with you not only the bear divergence, because we have many stock, it is at this juncture at the moment. Bear divergence, there is a pullback effect, and a rebound is supported by the hidden bull. How about even they say in the formal, how do we take a look at all these things? Actually, you see all these are on the higher low, and these are all on the lower low, which is portraying to become our hidden bull, the bull divergence scenario, right? A bull divergence scenario, regular bull divergence. But the scenario of all these things is suppressed below the SMA 200 line. The most healthy and confirmation it is this conversion, this conversion, because all these are the bull divergence, and bull divergence was always met up with the hidden bear. These are all the hidden bear position, lower high, lower high, lower high, with the higher high, higher high, higher high. Okay, so only this particular juncture which is spelling to us that the market is in the transiting from accumulation phase into the bull markup phase. This is a good scenario to interpret that the good juncture is taking place for SKP resources. Okay, so it's how we combine the market analysis, MACD, moving average, and this divergence come in juncture that we can analyze. Oh yeah, this is healthily for us to position. And all in all, I has been telling everybody over here is only by the technical field. I'm not mentioned anything about all these fundamental yet. No, I only stipulating all with the technical interpretations only. Okay, so it's significantly for us to take the lead. Okay, one more I wanted to share is the DSS. CDSS, isn't it? This is the bull divergence. Of course, with its much of the supportive on the former one, it is on the convergence, so a higher low formally. So this push up and the pullback will be the ending cycle. After this bull divergence, right, you see that there's another significant higher low. Convergence is taking place. And this convergence started to rush through this SMA 200 line. You see the SMA 200 line. And that after then it stay above already. And the rest of all these so-called the EMA line, the midterm EMA line, all these has started to arrange in a good arrangement already. Very good arrangement already. Of course, if you manage to capture during about 37, 38 here, now you're already in about more than 10, 15% already. Okay, actually, if you're able to come to all these analysis over here, right, you could be able to capture this part as well. One more I wanted to have a quick share is also on the beta. So for some of y'all, maybe can start to take a look into the beta divergent and started to portray a higher low. So would this started to have a new formation of the markup accumulation phase into the markup phase in conjunction with all the higher low convergence supporting? Okay, give yourself with some analysis on this part over here. Okay, there's a accumulations of the triangle patterns started to build up with it. I can see that this higher low pattern is started to build up with it. So see whether that you'll be able to see this end of the accumulation to have the next push up. Of course, we already stayed above the SMA 200 line already. The stop loss will be somewhere near to about 38 and a half. Somewhere drop below this part is not what we wanted to see already because everything is start to hypertrophy coming down. If it's good that it break up this line, then it will be a new trend to pick up already. Okay, I think I took up a lot of explanations on these stocks to be shared. So perhaps I'll drop back to Jack to take any of those questions from the floor.
Yeah, sure, JK. So yeah, I think there are actually few of the questions from the audience. Probably we start with Renhill.
Rank Hill stock,
Yeah.
oh, sorry. Okay, quick zoom in. You see during the initial state of the Rank Hill, it also tell us there is a significant a bull divergence is taking place. You see that a bull divergence is taking place during this Rank Hill time. The bull divergence lower low, higher low. Thereafter, it rushed through and stay above the 200, which is just now I just shown everybody's the DSS, the beta, which is somewhere this 200 line is coming down. No doubt there wasn't any good news in the market here pertaining to that two DSS and beta lah. Take for example lah. Because normally what we want is trying to be able to lead our user or our follower to come in near to the low area. So the bull divergence follow on with the next if the higher low. So that will become a bull divergence into the convergence. So that is a very healthy sign. And coupling together with the cross up above the 200 and lead through all the EMA. That is a unique one. Okay. So how about now? After seeing that price is coming in from that low, so during then it was probably around 40 cents. So now we already escalated so far up. So we met up with a short terms a short bear divergence. You see that during then in between there was a short bear divergence and the pullback take a substantial time. And that pullback was supported with this hidden bull. You see that? So now it already rebound so strong that it get even higher. So now we already get higher than that. It is a new higher high. So concurrently, when there is a new higher high, so if I were to make a comparison from there to here, I'm also on the higher high. Okay, except this scenario here, probably there was a chart patterns consolidation is taking place over here. Okay, so next is the risk will be where will we be able to see in subsequent next shortly. So that will be our resistance area. If this recent price could not be able to break up beyond, right, or even with the double top and even slightly higher, somewhere maybe about 17 to 18 here, then we have to watch out, see whether this guy could be able to get higher than this high or not. That is where everybody, whoever having this range, you have to monitor. Can this MACD come to the double top around? If they can't get even higher than this round top here, and with this higher high, so the potential of that bear divergence could be able to take place. You got to watch out. Will this scenario happen or not in subsequent? with the similar so-called push up and pull back. You got to be cautious about near to this region here. Okay. The question is, do if there's those who do not have any particular stock in hand, do you still want to stay, or do you want to follow through? That it will be a very challenging questions. A very challenging questions. See whether can I carry on with these stocks or not. Typically, you can't be a long-term guys anymore. Very difficult unless you come in and it could be able to penetrate to beyond 1.8 even to 110 and 190 $2 and above, that you could have survived through the next higher low, unless you will be there. If you were to come in now wanted to carry for a longer trip, right, nobody know whether you will this Hill stock be able to stay beyond 170 or 180. Nobody know yet, because currently I could have seen that we have a lot of so-called a higher risk of this whole bull divergence. No doubt this is a convergence is on the rise. No doubt it is there, but you have to take the chance in the sense that to see through the next higher low. Okay, but whoever have gone in seems somewhere around this 40-50 cents here, you have been carrying the stocks until now, right? You have plenty of these so-called the margins to survive through, no problem. You are luxurious enough to go probably wait for the drop below 130. That is the worst lower low. Otherwise, here you see all this is higher low, higher low, higher low, higher low, higher low. You have not seen any lower low yet until if this pullback was significantly dropped below this 130. If it's dropping below 130, you still have the significance or you're luxurious enough to take your position off. Otherwise, stay on from this group here. Whoever come from this group, stay on to it. But whoever do not have any stock wanted to come into the challenge, right? Can you bear with this so-called stop loss? Because it's too far off this rebound. 130 to about 160, 30 cents or 20%. Too much already. Okay? Too much for your risk. I will not guarantee anybody that when you take on, you will carry on through. Nobody will. Unless you want to take the challenge, survive through. Plan your losses first. For those whoever have no stock, plan your losses. If whoever have your stocks in hand, right, your stop loss point, I will anticipate around here. It's about 130 there. Okay, this is what I see from the technical perspective, because there was a so-called short-term consolidation here, A, B, C, D, E. So this guy likelihood it will break above this 175. Okay, if I were to take this one as the consolidations chart patterns, A, B, C, D, E, so this one would have be able to carry through. I wanted to see this one would carry through. But how far up before it would be a short pullback? Ideally, I wanted to see something like this. Then next, it carry on. This is where newcomer will have to survive through this pullback for the new higher low. Then it will continue. Otherwise, whichever on this ramp up and pullback will be your risk. The risk of these so-called potential losses. Because the only confirmation losses will be dropped below 130. Okay, that's my personal views from the technical perspective for whoever threw these questions up. Okay, back to you, Jack.
Okay, JK.
Jack,
So probably
yeah,
we answer last questions lah. HSSEB.
HSSEB.
Yeah.
This guy probably recently got a project, right? I can't remember what project they got. Okay, from the perspective of the let's look from the beginnings. This is where the accumulation phase into the markup phase. All the EMA is on the rush. After this part of it, short-term to mid-term EMA is pulling back near to the 200 there, and it is forming a new convergence. A new higher low happens during this time. So actually will be a very good sign for the next ramp up. Okay, will be a very good sign for the next ramp up. Means because this one already ramp up once, pullback effect is already taken place. A pullback will be this ABC. So this will be the new ramp up. Of course, today we met up with this a strong push after the pullback one. Let's see whether this one will have a new higher low formations before it take off. Okay, healthily I could have said at this juncture, you can see that all the yellow, the blue, green, the light blue, the green, purple color, brown color, all this coming back to form the new juncture to go up. This is what the moving average is trying to tell me at this juncture. And all these potential move up, right, it is happenings at the near to this 200 line juncture, which is pretty good. If whoever have gone much earlier before, you see this EG, this is how long they have gone through. It's more than half a year consolidation. Then when they come back, right, you see the juncture of this one. This is the new fan. Yellow, light blue, green, purple, blue, brown, red. This is a very nice, good fan in coupling with the significant long volume. Okay, together with this moving average, convergent, divergent, MACD, and DMI. You see that? Stay above 50. This is a very superb juncture. What was our stop? SSEB, right?
Yes, JK.
Are we having the similar, close and resemble scenario? Are we preparing this? Having a very long, good volume? You see that? Do we have a very good MACD sign? Do we have a very good DMI? Do we have a very good MACD? RSI stay above 50? All these are very supportive scenario. It is supporting the price awaiting to go up. No doubt today you see this significant pullback, probably will worry many people. Okay, but if you to come in to make the studies about the pattern itself, it has not actually thoroughly make a breakup yet, not thorough yet. Even though with this supportive low, I would probably draw a little bit longer to see whether it will be staying around this 106 or 107 here. Worst case, it probably will drop to this area. The volume is about 97, 98 here, which is coming back toward the 209. And that will be our worst support to be able to stay in. Because I wanted to see this potential new higher low before it kick off. Or whether the higher low will stay around this 106, 107 here. Okay. So that will be the current scenario for us to observe with that HSSP. Let me see the 30-minute. You see significantly over this 30-minute here is telling many people after the 1 hour's trade, right? Significantly it started to pull back. A confirmation took place around near to 12 o'clock. It crossed down at 12 o'clock. So afternoon session pullback is already taken place because of this so-called the 30-minute bear divergence. So when you see this bear divergence, what will we have to expect? Of course, this will be the new low of the MACD to come by. No? So make sure the MACD will have be able to stay above this level or maybe supported by this level here. Okay, this low. So the ultimate price should not drop below this low. This is too far away for us to endure with. Okay, so whoever actually preparing to stay with the HSSEB, right? Monitor for this next higher low to resume. Okay, monitor for next potential higher low to resume. Because I also interested to see that this good fans to form resemble what just now I've shown everybody's on the EG, that one, a spike up consolidation awaiting for the next ramp up. No? So of course healthily, if it's able to stay beyond about 120, that would be fantastic already. And will be people probably taking off with the next preparation of the ramp. Okay, daily wise, this is a very good juncture, a very good juncture. So we are awaiting for next higher low to form to carry on with the next ramp up. Okay, of course, the worst scenario would be below this 90 cent. Should not hold any position below this. Okay, too risky to hold because we already at this certain high level. Uh, but in conclusion, if we recap from the FBM KLCI just now I've shown, FBM mid cap 70 and FBM 70 small cap, mid cap. Most of them are actually at the position of the bear divergent and even bull supported on the up push. It's merely over the small cap and the mid cap there. We'll have to judge whether hopefully no pullback significantly will be taking place, and we hope that will be resemble to this so-called the HSEB, a new higher low formation for the next push up. Because so far in our market we have not had any negative news for us to a significant pullback lah. Except my personal opinion that Malaysia actually would have actually work out work very closely with many other Asia's country, uh, which not really pro to the preference of the United States. Okay, so perhaps with that scenario, fund manager probably will have tends to withdraw from our territory in shorter terms. Uh, so you can see that for the couple of weeks ago, quite a substantial of those funds have drawn out from our market, but not really have suffered us to see a new lower low happening into our market yet. So we are waiting for the next higher low to form to carry on with the new trend. Okay, so HSEB could be representing the very significant small to mid caps components. So hopefully it will take off with the next higher low. Okay, okay, back to you, Jack.
Okay, so I think it's now already 9:30. Probably we'll end our section tonight over here. So
Okay,
okay, I think with this we'll close our section shortly, and we'll back again 2 weeks from now. JK, am I right?
yeah, sure.
Okay,
By the
so
way, Jack, will they
yep.
be announcing the next event meetup or what?
Sorry, come
No,
in, JK. What do you mean?
you will you be announcing to the board to the user
Oh, you
when will
mean
be the
the
next meetup
Sifu
face to
event,
face
is
or
it?
what? Yeah, you will,
Oh
right?
yes, yes, yes. I will inform the user. Yeah. By the way, just for those that who
Okay.
are here, Mr. JK also is coming to our seafood event, the event that I post out in the Telegram. So if let's say you want to meet up with JK, or probably want to ask JK, personally about XChat and some of the features, do join us in the event in Sitamo PJ. Well, we will definitely try our best, okay, to help you to answer some question you have, especially regarding XChat. All right. So with this, once again, thank you for joining us tonight. Well, 2 weeks from now, we will have another section with JK again. And do remember to follow our Telegram. We will definitely share how all our upcoming event in the Telegram as well. So with this, thank you, good night, and thanks, JK, for your time today.
Thank you. Bye bye, everybody.